Good afternoon. George Cavaligos for Naked Trader. A little bit earlier today. Hopefully you can see how quiet it is behind us here on the trading floor. Not a lot going on. We're stuck in the same range that we've seen for the last 2 days, unfortunately, in the 10-year. It did get down to 119.25 again very early this morning. Hopefully you were able to get a few bought in down there and job them out up here against this 120.06 to 11 area that we've been struggling with up here. Market's still bid, closing up near these highs, but we've seen this before the last couple weeks. As long as we're stuck in that range, you just got to trade that range. It's shaping up to look like a little bit like a fourth wave consolidation pattern, which still points to some higher prices here. I like buying those put spreads just to be protective here. I think it's late in this rally, but it's not over yet. And until the market tells us convincingly, we're going to have to keep betting on this range, kind of slightly sideways to higher trade. The weekend's up. A lot of headline risk again. A couple headlines flashing around about Libya shutting down oil production completely. The crude has rallied back a little bit. The metals have rallied back a little bit. And I think that's one of the things that's keeping the bond market bid too. You have these headline risks over the whole weekend. When you can't trade, it's going to keep people from putting on any mega size short or long positions, I think, right now. A couple things to look at. First off, Sunday night, the Treasury markets roll. June becomes the front month. Typically, that'll really pick up on Monday morning when the pits open up. Roll is still going on. Yesterday was probably the peak of the roll activity, but we did see a lot of it today. And that keeps things cloudy here as the roll back and forth between March and June is affecting the outright prices a little bit here too. And then we also have month end on Monday. And with these indexers, there's needs to buy and sell different products. I think there's a small need to buy treasuries going into this month end. Probably seeing some of that today. We'll probably see a little bit more of that Monday. And then the new month on Tuesday, and we'll see how things go. I'm still favoring a little bit higher prices here. If you look at that recent range that we've been stuck in, it's basically a half a point. I think if we can get above this 120.11 area, take a look at the old highs. There's some old highs and fib retracements up. That 120.21 to 120.22, that's a very key area. I think if you're long in here, you kick some out against this 120.06.11 area. Kick a little bit more out, and actually I want to really start getting aggressive on the short side if we see that 120.21 to 22 area sometime over the weekend or into Monday morning. I think it's more likely we'll see it Monday morning than over the weekend unless something bad happens. But that's about it, guys. Have a great weekend. It's been a tough kind of week. Haven't done a lot of things here, unfortunately, but you know what? Sometimes these rollover weeks are kind of tough, and it pays to be a little bit risk averse. We'll see you on Monday. Have a great weekend.
No.